All right, guys, let's turn on a microphone here. I don't need to be typing. I can talk to you guys. Good morning, everybody. Yeah, Gary, sometimes that news is like a starting pistol. It was such a great setup, though. I mean, every chart said that it was going up. And you know what? I had an advantage. I took it. And that one didn't work out. And that's okay. And guys, I think that's one of the biggest things that you have to learn as a trader. And that's why I posted that one. I'm not afraid to post that I took a loser, right? Because losers happen. You can't expect to win every trade, guys. It's a very normal, natural part of an equity curve. Um, the idea is that you stick with it, right? You don't let one trade bum you. Oh my gosh, I just took a loser. This sucks. I'm going to go run around the house for 8 minutes stomping and kicking. Good morning, Jose. You say to yourself, I had all the advantages. It was a great trade. It didn't work. To hell with it. It's in the rearview mirror. Let's move forward, guys. And that's exactly what I did. That trade didn't work. I let news sort itself out. When I came back in, the market said, hey, Mark, we're really sorry about that loser. We didn't know what we were thinking, man. We were thinking about something else. There was shiny stuff. You really needed that money. That was your money, and we took it from you. And I got back in, and it was pretty effortless after that. It went right to where it was supposed to go, right where Fibonacci, right where momentum said that it would go. And the key to taking that second one, guys, is all charts agreed. That's going to be my battle cry today. All charts agree. Man, it makes it easy. They were not sorry. They said, thank you, may we have another. I love it. Guys, welcome to the classroom. Welcome to the classroom. I hope everybody's doing great today. I hope everybody's excited today. Guys, I want to start the day off by saying happy birthday to Miss Safia. She's been with us for a while now, been an owner for a while now, and today is her happy birthday, 28, 29, somewhere around there. I hope today is an absolutely amazing day for you. And with that said, let's get to business, right? Let's do what we do. How's everybody feeling with the simplicity? Are you guys kind of embracing it now? Are you starting to see it? You starting to feel it? You're like, oh my gosh. Simple sure does make sense. Simple sure does make life easier. I hope so, guys. One of the easiest ways to keep it simple is make sure that that market's not moving into a news release. This morning at 8:30, we had all sorts of high impact news. And guys, it wasn't a crazy release. There wasn't a ton of action on it, but it had the potential, right? It had the potential to move things around, to shake it up, to make the market a little unpredictable. And then at 10 a.m. today, we're going to have pending home sales. That's medium impact. That's another one of those things that I look for, those medium impacts. It may make the market move faster than I care. Gary. So each and every morning, guys, I'm coming to forexfactory.com. I'm looking for these news releases. And we're good. At 10 o'clock, we have that medium impact. If you're a natural gas trader, 10:30 is probably going to behave as high impact news for you. I don't know that I have any of those in the classroom. But this is part of my routine, guys. Everything is habits. Everything is routines. It's systems. I wake up, I pour a cup of coffee, right? I come in, I set my computer up for success. I start to open my charts. I come to Forex Factory. I'm preparing myself for the day. Once I'm done preparing myself for the day, looking for news releases, I'm going to my spreadsheet and I'm looking at the trades that I took yesterday. I'm in this process, guys, where every day I want to be a little bit better. Day trading's a marathon, right? Guys, nobody ever got 100% proficient at day trading inside of a week. It's not feasible. But what you can do is you can get a little bit better every day. You can use recognition. You can use patterns. Hopefully, you're using this coaching system that Nexgen has in place. But every morning, guys, I'm going to study the previous day's trade, and I'm going to look at what worked and what didn't work. Maybe trading in determination conditions didn't work for me. Maybe not having momentum didn't work for me. Maybe, not getting it at the right area didn't work out so well for me. I'm going to see that. I'm going to note it, and I'm going to commit my day to day to making sure that I'm not making the same mistakes that I made yesterday. And more importantly, that I'm repeating the things that brought me success the previous day. What felt easy? You know, what kept you relaxed? We had somebody sell the market over and over on the way down yesterday. Just money, 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 money. It was awesome trading. And the word that was used to describe it was calm. Every chart agreed, every indicator agreed, everything on every chart said that market was going to do exactly what it did. And she felt very calm taking those trades. Sometimes when you trade into problematic areas, when you're breaking rules, your palms are going to let you know. They're going to get a little sweaty. You're going to find yourself kind of scaling your charts, right? Leaning into the monitor, using magical phrases like, oh, I hope, I hope, I hope, I hope, I hope. Guys, pay attention to these. The things that make you nervous typically aren't the right thing. But a brief historical study each morning is going to protect you, is going to prepare you for the day. And it is going to accelerate the learning path. So use that spreadsheet, guys. Make sure that you're studying it each and every morning. Make sure that you are logging every trade that you take, right? Every time you enter the market, get it into your spreadsheet, guys. That's part of the path to being a successful trader, ASAP, to being a confident trader, ASAP. I hope so, Ziba. Guys, post your trades in class, right? You are already doing a great job of it. The CEO, John Novak, posts his trades in class, right? He knows I'm going to give him feedback. And we do. Everybody needs feedback. Everybody needs a coach, guys. Everybody needs to know. 9 cats, Ziba? Oh. Guys, we're going to postpone class and we're going to organize an intervention for Ziba. Guys, post your trades in class. I don't care where you are in the trading process. If you're in this classroom, there's something to learn, right? Maybe you've got your entries down pat. You're like, man, I am so good at entries, but now I need help with management. Guys, the class is still yours. Post your pictures, ask your questions. Maybe you're working on a new trade, right? You're like, okay, I've got this high probability trend trade down, but now I want to focus on the high volume area trade. Guys, post your pictures in class. This class is designed for newer users, but it is also a platform for all of you that are continuing on with your education. So don't be afraid to use the class for what it is. It's a sounding board. Post your trades in class. Use that spreadsheet every day. And guys, we're going to learn the rules for when it's okay to trade, right? We're going to learn those trigger line Fibonacci rules. We're going to talk about them, the same rules that we talk about every day. High probability trend trade, guys. Confidence through success, understanding through repetition. Your job is to simulate your trades daily and post those pictures in class every day. Give me a picture. And most importantly, guys, give me a picture that's annotated. Give me a picture with your rules on it. When you enter this classroom, you should be saying to yourself, you know what I really want? I want Mark to hold me accountable for the rules that I put on my chart. I want Mark to hold me accountable to following my plan. And when you put your rules on here, that's exactly what I'm going to do. And I'm not going to lie to you. It's going to upset you every now and then when I say, hey, Bobby T, you told me that you had odds favorable momentum, but let's go to the manual here and let me show you how you really had an anything can happen situation. Good morning, John Novak. So make sure that those annotations are on there, that they're clear. Tell me why you did what you did. And guys, here's a great thing. Tell me how you felt getting into it. Were you excited? Were you nervous? John, you want the microphone for a second? Gotta razz your brother a little bit, right? Guys, let me know what you were feeling, what you were thinking. And what it does is it's going to give me a great indication of how you feel about your rules, how much trust that you're putting into those rules. Whoops, I lost my picture. We're going to simplify, right? We're going to simplify. We're going to start this first hour. High probability trend trade, guys. A trend trade where every indicator on every chart agrees. Man, John, it's funny that you said that. I was having a conversation with someone yesterday. I said, I go back and I watch these videos. Guys, I teach the class. I'm pretty solid with what I'm doing. I go back and I watch John's videos, maybe a video that I haven't watched in 6 months, and I always pick up a concept. Um, and it's pretty cool because when you have a familiarity with the market, when you start to get more comfortable with the indicators, and you go back, those things that sounded like a foreign language in the beginning make so much sense. I watched part of the video he posted yesterday. I had a really busy day yesterday, but even the little bit that I watched, I found helpful. I did find helpful. So guys, simplify. We're going to keep it simple. We're going to focus on one trade. Every indicator agrees. And then after class, use that market replay, guys. Go practice your plan. Practice your rules. Fix any mistakes that you might have made during the trading day. Skip the trades that you shouldn't have taken. Maybe take the trades that you skipped. Take pictures of those correct trades, guys. Bring them back to the classroom. I love it when people do market replay and bring me their pictures for study, for feedback. And repeat this process every day until you're always taking the correct trades. And if you're always taking the correct trades, you should be guaranteeing yourself that you can win, right? Because your trades, your rules should have been proven and tested to win more than they lose, to give you a statistical advantage. So we're going to keep it simple on those rules initially. We're going to talk about 3 rules that create 3 advantages, guys. 3 rules that put you in the position all indicators agree on, all charts. And this is your high probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that embraces simplicity, that requires 3 advantages to create the trade. And those 3 rules are going to happen on only 2 charts. And I think that this picture right here is imperative for my newer users, or maybe for the people that are getting distracted by too much information. You can create a plan capable of winning with 2 charts and 3 rules, guys. And it starts on a large chart. Your 13-2 chart behaves as a broad stroke of a brush. The 13-2 chart reflects the mentality of the large group of traders controlling the market. We're going to use the 13-2 for direction. We're going to use the 13-2 for areas. If the background on your 13-2 is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. And guys, if the background on your 13-2 is red, you're in a downtrend. And you're only looking for rules to be met for high probability trend trade short. And if you stick to that one, guys, it gives you the advantage of trading with the trend, right? Sorry, my brother sent me a little message on the side, and I'm giggling because I'm trying to multitask and I'm not good at it. Rule number 1 for a high probability trend trade is met on the 13-2. Rule number 1 says that you have to have strong triggers. When rule number 1 is met, guys, this is why I like this picture so much. When rule number 1 is met, you have the advantage of momentum, guys, and momentum moves things. Momentum breaks things. Momentum keeps a market moving in the direction that it's moving, gives it the best chance of success for getting to the next area. And guys, that's your first rule, your first advantage. Rule number 2 says no termination conditions present, guys. No areas that may reverse the market, that may stop the market. And when there are no termination conditions, you have the advantage of a clear path. Once again, guys, these advantages are put into place to put you in a position where you have the ability to win more than you lose. And momentum and a clear path on your 13-2 chart is a great precursor to getting you looking for your entry. When those rules are met on this bigger, slower chart, you're going to turn your attention to a 5-1 chart, guys. And this is your entry chart. You're going to refine the broad stroke of a brush provided by the 13-2. You're going to pinpoint your area of entry. And you're going to use rule number 3 to do that. You're going to use a limit order to buy or sell a pullback to an area inside of favorable large triggers. Guys, you're going to be able to pinpoint with such accuracy where the market is likely to continue that you're going to wait for the market to come to you. You're going to use a limit order and just let it sit there. And the market hopefully is going to come down and smack right into that limit order and put you in a position, and putting you in a position with the advantage of momentum, with the advantage of a clear path, and the advantage of an entry area. And all the high probability trend trade is designed to do is to teach you to read your charts. Your first 20 days with Nexgen, your first 20 days of simplicity, if you're coming back to it, if you're trying to change your ways, is let's become chart readers before we're day traders, right? Let's learn to look at our indicators, because when you're great at chart reading, you're going to understand three very key concepts. You're going to understand where the market is likely to continue. And when you hit that continuation point, that's going to be your entries for the highest probability trend trade. You're going to understand where the market is likely to go, and this is going to help you make great decisions on profit targets. And finally, you're going to understand where the market is likely to stop, guys. And this is those termination conditions. These are areas that may reverse the market, areas that may create a bounce. These Fibonacci areas that you're looking at, guys, these are creating, or they're points of reaction for traders with big accounts, traders that move the market, that create the momentum. You can see before the market ever reaches Fibonacci where that market is likely to react and where your advantages go away. And those termination conditions, while they will keep you from taking a trade in the direction where a trend may end, they act as an anchor for your highest probability trend trade. That trade where all indicators agree, that one that's only 3 rules on 2 charts. Because when your high probability trend trade is coming from a 13.2 termination condition, that area that stopped the market, guys, this is a trade that typically wins 70 to 80% of the time. We're going to talk about these 3 rules. We're going to talk about the advantages that they provide. We're going to recognize them visually, so that you can pick them out of a lineup instantly. And we're going to focus on learning these rules and making them as easy as possible. Everything that I talk about comes from the education material, guys. This is your tutorial section, and everything that you do should begin with strong trigger lines. Strong trigger lines are so easy to recognize. In an uptrend, when the background is green, your small triggers, which are the solid lines, should be above the large triggers, these dashed lines. The space in between the small and the large, like a pair of scissors ready to cut, has to be open. This space lets me know that the odds are favorable for the market to continue in the direction of the trend, guys. Odds favorable momentum is the phrase that you're going to hear in class all the time. You're going to see it annotated OFM. In an uptrend, when you have odds favorable momentum, this is the most favorable look for using that smaller, faster chart to buy that pullback right at Fibonacci for continuation of the trend. And you're going to see these tails on a 13.2. These are about 20 bars on the 5-1. That's that refinement process. In a downtrend, small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. It's that space between the two that lets me know that the odds are favorable for the market to continue down. And once again, we're going to use this advantage of momentum to look for Fibonacci areas on a smaller, faster chart so that we can enter with the trend and take that momentum down to the next target. Guys, if you commit to momentum, you're already ahead of the game. Because when those small triggers come back to, you can see how they work their way closer and closer to the large. Ultimately, they find their way inside of the large. This is what we call anything can happen triggers. These are weak triggers. You lose that advantage of momentum and you kind of turn it into a little bit of a crapshoot. So odds favorable momentum is going to take just a little bit of patience, guys. It's not going to happen every second of every day. Sometimes you're going to have those anything can happen triggers where the smalls work inside, right? Losing that momentum, taking away that advantage. And you'll notice that these anything can happen looks typically precede a reversal in the market. Then when that momentum gets back to odds favorable, there's that tail, there's that opportunity to take it up to the next key area. It slows down, the market reverses, the momentum increases, we take it down to that next key area. This is going to cycle all day. You're going to see odds favorable, anything can happen, you're going to go back and forth. Your job is going to be to wait for that best of the best look. When they don't agree, maybe the larger up, the smaller down, the background's red, but the triggers are green, guys, it's okay to just sit on your hands, right? It's all right to just sit on your hands and wait for that best of the best look, wait for that odds favorable momentum to return. And John, that's a great picture. We're going to talk about that picture in just a little bit after we finish talking about these advantages. Whoops, I didn't mean to put a V in there. And guys, that's how the classroom works. We are going to talk about the rules, and then we're going to look at your pictures. We're going to talk about your pictures and how they relate to the rules. But we're going to dedicate this first hour to simplicity, to making sure you know exactly what you're looking for. Guys, is everybody comfortable with odds favorable momentum? That first step in getting you into a trade, that advantage that gets the ball rolling. Smalls outside of the large, both wide angled in the direction of the trend. Guys, that's the money look. Once you have that momentum, we have to make sure that there's nothing in the way, guys. And we do that through recognition of termination conditions. In a termination conditions, nothing more than a Fibonacci area that may reverse the market. Guys, may is white and it's underlined. It may reverse the market. It may not. So we're going to use a two-part process to determine whether or not it's likely to stop the market or whether that area has the potential to break. And we do this first by knowing what your areas are. Areas that may reverse the market, guys, are divergence highs and divergence lows. Divergence is a fancy word that says that there's a difference between momentum and price, guys. And when a pivot forms, meaning the market changes direction, good morning, birthday girl. Happy birthday to you. Scroll up. I think a lot of the class wished you happy birthday. It always feels good. Guys, when this pivot is formed, when the market goes from down to up and it loses momentum, you're going to see that cyan line form to the right. The cyan line isn't a termination condition. It's just a loss of momentum. When the market goes up, trends back down, you see that magenta line, you know that the market's losing momentum at that high point, guys. And again, the pivot itself is not a termination condition. It's just a loss of momentum. You're also going to use red resistance, blue support, yellow one-to-ones, and in some cases, you may use a midband. So we're going to look at these areas, and there's a really easy recipe. How do I determine whether or not I've given away the advantage of a clear path? Guys, it's a two-part process, and it begins with price reaching the area. Price must reach the area. So these dynamic Renko bars, you can ask them here, Safia. And then, of course, John is welcome to answer them. Maybe I can help answer them. And we'll cover all those questions after we go through rules. So if you want to hold them a little bit till after we do rules, they won't get lost in the mix. No worries. Guys, price reaches support. When price reaches an area, all you have to do is ask yourself, where are my trigger lines? And if those trigger lines remain above support or conversely below resistance, well, then you've reached a termination condition. You've reached an area that may reverse the market. And because you have, you no longer have a clear path. Oh, there you go. Even better. Little private session with John Novak, and then John will turn it into lessons for the class. Thank you, both of you, for that. Two-part process, guys. Price reaches an area, where are the trigger lines? In this picture, I like this one because it reminds us that divergence lows are not termination conditions. This is nothing more than a pivot that has a loss of momentum. When price returns to the pivot, price reaches the area, all of your trigger lines remain above. Guys, this is what we call a pivot stop out. This is a very powerful termination condition. It means that the buyers robbed all of those sellers of their momentum right here at this pivot. And then when the sellers tried to exceed that pivot again, they got a couple ticks and the buyers unloaded. When this termination condition creates a full reversal in the market, large triggers go from red to green, small triggers go from red to green, provides you odds favorable momentum. This is what we call a strong bottom, a no triggers through the area termination condition that causes a full reversal is a strong bottom. And the other side of that is a strong top. A termination condition that creates a full reversal from a high is what we call a strong top. In this picture, you see that price reaches resistance. All I have to do is ask myself, where are the trigger lines? Well, the trigger lines have remained below, therefore I'm not looking for long trades. Rule number 2 is not met. I do not have the advantage of a clear path. From that resistance, the market pushes all the way back to that mid band, to that support. And once again, my trigger lines are nowhere near. I can't go short even with a red background into support because this is an area that may reverse the market as well. I can't go long and I can't go short. 90% of what I do during the day, guys, is sitting on my hands and waiting for advantages. 10% of what I do every day is actually trading. One thing that I'd like to point out is when this Fibonacci area is reached, you'll notice that those large triggers remain a full bar away. Guys, this is what we call the gap theory. Anytime price accelerates away from the large triggers fast and reaches a Fibonacci area or a mid band, if those large triggers remain a full bar away, we give a lot of credit to this area, likely to hold, because price loves to snap back to those large triggers. It's what we call the gap theory. That gap theory pulls the price back right to the large triggers, takes it to resistance, no triggers through, not going long. There's one of those pivot stop outs, very powerful, even more so when it happens at a Fibonacci area. And then a second resistance, guys. And this termination condition creates a full reversal and provides odds favorable momentum. That's the best of the best. That's the anchor for your strongest, highest percentage winner trade that you can take. Thanks, John. Little DM there. Price reaches an area, trigger lines don't break. Guys, that's your recipe. Is everybody comfortable with this? Price reaches, 0 trigger lines break, no trades into it. If this termination condition creates a full reversal, we consider it a strong top or bottom. So guys, when is an area broken? We've talked about when it isn't broken. In order for an area to be considered broken, in order for that path to be clear, price reaches support, all of your trigger lines must get below the area in question, small and large, both sets of lines, and then the area is broken, then that path is clear. And the same thing going up. When the small and large break to the other side of an area, we consider that area broken. The path is now clear. And guys, that's when rule number 2 is met wholeheartedly, when we're not toying with one of those areas. As an area breaks, resistance behaves as support, support behaves as resistance, guys. And here's a little 3-part picture, kind of giving you that whole synopsis. Price reaches an area, absolutely no triggers are through. The area is not broken. There is no clear path. Rule number 2 is not met. Your job as a rules-based trader is to sit on your hands and just be a little patient. When both the small and the large break through the area, now the path is clear. It's time to look for that high probability trend trade. You'll notice the odds favorable momentum, and there's one of those tails, one of those potential entries. This is your highest probability trend trade, guys. This is the scenario when everything agrees for a trade. There's going to be an instance. Whoops, I wanted to give you guys this picture. There's going to be an instance where you guys wander outside of that highest probability trend trade. And your first meandering is going to be what we call a 50-50 trade. And a 50-50 trade isn't anything to do with your chances of success. A 50-50 trade means that the small triggers have broken through the area, but the large triggers are not. The most important factors on this 50-50 trade is that you have odds favorable momentum. Strong triggers can break areas. They do all the time. When the smalls are through, the large are not. 50-50 refers to 50% of my trigger lines are above, 50 or below. Guys, that tells me that this Fibonacci area has the potential to break, but it hasn't broken yet. It has the potential because of that momentum, but it hasn't broken. It's not a clear path. Rule number 2 hasn't been met. And when rule number 2 hasn't been met, it doesn't necessarily mean that there isn't a trade to be had, guys, but it takes it out of the realm of high probability and it puts it into what we call a medium probability trade. And a medium probability trade means that most of your indicators line up for a trade. However, a small issue exists. In this particular trade, your small issue is an area with the potential to break but hasn't broken. And when you're executing these trades, guys, you have to learn how to manage assertively, right? These aren't home runs. These are getting in, making sure that you're protecting your assets a little bit. And if this is your small issue, if an area that hasn't yet broken is the problem that you're facing, it's imperative. If you're forfeiting that advantage, don't forfeit the other two. Make sure that you're not giving anything up beyond that one item. Entries need to be perfect. And when we talk about entries, we'll talk about that perfect medium probability trade entry. We'll talk about where it comes from and what the look should be on that smaller, faster chart. So we will talk about 50-50s today, but right now we're going to stay focused on that highest probability trend trade. And if you give yourself 20 days, just 20 days of focusing on a high probability trend trade, guys, learning to read your charts, learning to read those indicators, understanding the advantages, where the market is likely to continue, where it's likely to go, and where it's likely to stop, medium probability trades will become easier because your chart reading will allow you to manage them assertively. One more termination condition that I'd like to talk about, and you're going to see it when your 13.2 isn't showing signs of a market preparing to reverse. Maybe you have a clear path. Maybe you have odds favorable momentum and nothing in the way. But this final termination condition you're going to see on your smaller, faster chart. This is the only in all caps, termination condition that I'll look for on the 5-1. And it's 3 divergences in the same price range. It may terminate the trend. 3 divergences means that the market has lost momentum, that price and momentum don't agree 3 times in a row. It becomes even more powerful when those small triggers work their way inside of the large triggers. If you remember that first lesson on odds favorable momentum, the market's likely to continue in the direction of the trend. Guys, this look is the same on any chart. Momentum is identified by the space between the small and the large. When you take away that space, when the small work their way inside, when you weaken those large triggers, guys, anything can happen. Triggers and 3 divergences adds fuel to the fire. It makes the market more likely to reverse in this point. And it becomes even more powerful still when that third pivot is higher than the previous from a low or lower than the previous from a high. And guys, I'm going to give you this picture in the room because this is also the look that's going to allow you to manage those medium probability trades, to be assertive, to recognize slowdowns, conditions changing before they change, allowing you to get to a 0 loss level, allowing you to get out of a trade when the conditions change. And these 3 divergences will happen on any time frame. When they happen on a higher time frame, it's a very powerful look, especially at Fibonacci, but you're going to recognize it first on a smaller, faster chart, and it's going to help you identify when that 13.2 may be changing but isn't giving you the indication yet. So guys, those are your termination conditions. If they're present, you no longer have a clear path, guys, but if the terminations are false, if there's room to that next target, then we have a clear path. And once we have momentum, and once you have a clear path, guys, it's time to get that entry area, time to use that limit order to buy or sell a pullback at an area inside of favorable large triggers, guys. You are going to be able to pinpoint with amazing accuracy where the market's likely to continue, so much so that you're going to wait for the market, guys. And during the live market, this is what your 5-1 looks like. If we're in an uptrend and I have momentum and there's nothing in the way, my 5-1 is going to be screaming to the upside. My triggers are going to be strong. My bars are going to be green. My large triggers should be wide angled in the direction of the trend. They should be one on top of the other. And guys, this is the look that we call favorable large triggers. And when I talk about my rule 3, for me, my biggest advantage comes from favorable large triggers, from the large and the synthetic, which is just a large trigger from the 13.2 chart. When my large triggers are one on top of the other, when they're angled in the direction of the trend, they're strong. Guys, this is going to provide me the smallest window of opportunity. This is going to provide me typically the least amount of risk, the smallest window where that market is likely to continue. So I always encourage people, embrace the idea of those strong trigger lines, and then you're going to let that trend trade originate at a line inside of the triggers. Lines can be Fibonacci support or resistance, mid bands, or yellow 1-to-1s. But since we're waiting for a pullback, right, we need a little retracement, counter to the underlying trend. Everything says up. I want this market to come down to me, guys. That's how confident I am in my ability to identify where the market is likely to continue. And that little pullback begins with a reversal bar on the 5-1. And at the time of this reversal bar, I'm going to create what I call a window of opportunity. Sometimes you'll see it annotated the woo. This window of opportunity will extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. If it's a short trade, if we're looking to sell the market, it will extend from the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. Guys, your job as a rules-based trader is to right-click on your chart and activate a limit order for a long trade at the top of that window. Because of the momentum on the 13.2, because of the clear path on the 13.2, we're anticipating a shallow pullback right to that area inside of favorable large triggers. But because it is a window, we're bracing ourselves that it may go to the bottom of the window, but we're going to enter at the top because of the momentum. For a short trade, you're going to enter at the bottom of that window as the market pulls up to it to get you into that trade. And guys, this is a trade where you're powerless about whether or not it comes, right? You have the advantage of momentum. You have the advantage of a clear path. You were able to identify that window of opportunity where the market was likely to continue, guys. And if the market pulls back to the top of that window, you're in a long trade. You are in a long position. You're anticipating the market to go up. You have the 3 advantages in place. Your initial protective stop will go below that window of opportunity where the market should not go. Because if price exceeds, well, you don't want to be in that trade anymore. It's a cost of doing business. You want to wait for the next one. But this is a trade 1,000 out of 1,000 times I'm 100% obligated to take because it fits my plans, because it fits my rules, and more importantly, because it gave me the advantages that I needed. Telling me that this is a trade that typically wins more than it loses. I've got a 70 to 80% chance of success, and I'm willing to take this trade and I'm willing to risk the capital for it. Because you wait for the pullback, once it goes in the direction of your trade, you can reduce your risk below a reversal bar. Because you waited for the pullback, your profit potential is increased exponentially. Guys, this is your best of the best. It's only 2 charts, right? It's only 2 charts. It's only 3 rules. It's recognizing odds favorable momentum first, making sure that the market is likely to continue in the direction of the trade. It's recognizing that these key areas have not been reached. If price reaches the areas, well, then it's a termination condition. If price hasn't reached the area yet, guys, these behave as targets. And when these conditions are true on the 13.2 and you get a reversal bar on the 5-1, create your window of opportunity inside of those favorable large triggers, guys. This is where the market's likely to continue. And if we scroll back historically and circle a tail when the rules are met on the 13.2, and it lines up with an area inside of favorable large triggers, guys, this is your highest probability trend trade. Your job is to take a picture, right? And once you take that picture, get your rules on the chart. There's my rules. Have they been met? Yes, 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 yes. I know that this is a trade that typically wins 70 to 80% of the time. I want you to take this picture And I want you to put it in the room, and I want you to wait for feedback. I want you to say, hey, Mark, 99% sure my rules were met. This is my trade. This is my entry. Let's talk about it. What do you think? And we'll talk about the advantages. And if there's something that I see, we'll talk about those as well. After you take the trade, let's get it into your spreadsheet, right? Let's get that link in there. Let's call it the perfect trend trade. Well, I can't paste. Talk about what it is, how you felt, whether you had a strong top or bottom. What was your momentum like on your charts? Did you win? Did you lose? Are there any notes that you have on it? Fill your spreadsheet. If it was the perfect look, if it was the perfect look, put it in your favorite look section, guys. This is about 200 pictures of perfect entries on a high probability trend trade. 200 pictures that are all verified by a checklist, guys. A simple checklist that I just posted in the room that outlines the advantages. You can print this out, put it on your desktop. Every time you take a trade, make sure that these rules are met. Every time you take a trade, annotate your chart with these rules, guys. Use the language, area for entry inside of favorable large triggers. Hold yourself accountable for taking a trade that typically wins more than it loses. I just put that one in the room. I'm also going to give you guys this one. This is a high probability trend trade checklist. And I liberated, let's not say stole, I liberated pictures from the user guide to show you visually exactly what these advantages look like. Keep that on your desktop. Take a look at it. And then, guys, my hope for you is that you'll keep it simple initially, that you'll focus on nothing more than entries, that you'll focus on learning to read your charts to understand advantages. And one of the easiest ways to do that is to create a plan for yourself, guys, a very simple plan. Keeping it as minimal as possible, as streamlined, laser focused as possible. And this document right here is an example of how to write a plan. This isn't your plan. This is an example of how to write a plan. Should you decide to steal it, wink, wink, nudge, nudge, make it yours, right? And do it by using the phrase, my trade is. My trade is the high probability trend trade. To enter the trade, I must have the conditions of this checklist met because I know, and this is why it's highlighted, when I mark yes on each one of these, when I have a good top or bottom, momentum, clear path, entry area, I know that this is a trade that typically wins 70 to 80% of the time. This is a trade that provides advantages on every chart. My job is to be able to nail this entry, guys. So I'm going to take pictures of my perfect entry long, my perfect entry short. I'm going to put it into my trading plan. You can study, go back, circle those tails, take those pictures, put them in your plan. Steal them from class, guys. When somebody posts a perfect trade in here, and it's a high probability trend trade, I steal it and put it in my spreadsheet. There's no reason you shouldn't either. Grab them from the manual. There's a lot of pictures of perfect trend trades in there. But if you commit to taking as many pictures as you possibly can for the first 30 days, there's probably 15 to 20 opportunities a day. I take more like 40 a day. But at the end of your first 30 days, guys, you're at like 300, 400 pictures. It's hard not to get comfortable with something. Remember, we're learning the looks to make them easy. Put those pictures in your plan. Mechanical, right? Emotionless, void of hope and wishes, simply a pattern that's been proven to win more than it loses. And now you have to do something with that great entry. This is the second piece of the puzzle, right? If learning to day trade can be kind of compared to eating an elephant. If you say, I'm going to eat an elephant, it's overwhelming. If you say, I'm going to take one bite at a time, it becomes manageable. Your first bite is entries. Your second bite is the management plan. And if you allow this to be as mechanical as your entry for the first 30 days, it's going to pay dividends while you learn to read your charts in the most mechanical way we know of. Use it, make it yours, use the language possessive. I will trade 2 contracts. My initial stop will be 12 ticks, adjusted above or below that window of opportunity initially, guys. The 12 ticks gives you time to react, to put that stop where the market shouldn't go. Sometimes it may be 8 ticks, sometimes it may be 15. But 12 gives you reaction time. be moved 2 ticks above or below the reversal bar in the direction of my trade. When that market starts to move in the direction of the trade, you're going to reduce risk. Your first profit goal will be $100. And if it's reached, you're going to move your stop break even manually, right? So you have $100 in the bank. There's an awesome dopamine kick. You're creating confidence through the memory of success. And now you have absolutely nothing to lose as you let the market either run to your second target of $200 or get stopped out break even. And guys, this is mechanical and emotionless, and I can't stress that enough. You will have in the very beginning, as you learn to read your indicators, you're going to take $100 trades that you get out of for break even. That's okay. You can adjust your plan as your education increases. But I want to remind you that if you only make $100 and you do that 4 times a day, guys, that's a $2,000 week. Let that soak in for a second. You don't have to hit home runs to be a successful trader, guys. You have to give yourself advantages. Protect your money, right? But protect it mechanically. Don't move stops emotionally. Be pragmatic about it. And if you allow this to be your path for the first 20 days, and let me phrase that a different way. If you're not winning 60, 70% of your trades, right? If you're not finding success in the markets, maybe you're coming back to Nexgen. You're like, man, I tried to do it my way and it doesn't seem to be paying dividends. I need to simplify. Give this one 30 days, guys. I've never had anybody in the history of Nexgen, for me teaching this class, follow this checklist, trade this plan, and not do better than 75% winners. But what you're doing is you're understanding how to read your charts, right? Which is going to open doors for you. You're going to understand fluently where the market is likely to continue, where it's likely to stop, and where it's likely to go. And the idea is to build a foundation that's capable of winning. And I'm going to say that one more time. To build a foundation capable of winning consistently as you expand your knowledge base through repetition, guys. You can be a successful trader really pretty quickly if you keep it simple. The problem is we're all human, right? And when we're human, we frown on simplicity because it has to be difficult to be effective. Because we have to insert our opinions, we have to force our will on the market, we have to create predictions. Or what we could do is identify termination conditions. Pivot, not a termination condition. Price reaches that pivot. Trigger lines don't break through it. Now we have a termination condition at Fibonacci, guys. Rule number 2 keeps you from taking a trade short, right? 3 divergences in the same location. There's another one of those termination conditions, adding fuel to the fire. If I scroll back, look at this odds favorable momentum, and the market continues down. And guys, I'm going to make this as simple as I possibly can. I'm going to take all the noise off of this chart because I want you to embrace momentum. Smalls are outside of the large. They're returning, but they're outside of the large, right? There's those tails. There's that best of the best look, that potential pullback on the 5-1. I just circled the tail. And it's a pullback to an area of resistance inside of favorable large triggers. Guys, this is crude oil today. And I'm going to circle that tail. And it's a pullback to resistance inside of favorable large triggers. And I'm going to circle that tail. And it's a pullback to resistance right inside of that large trigger, guys. This is your job for the first 20 days, to go back and do this drill. Look for your rules to be met. Wait for those tails with odds favorable momentum. And of course, that's in the middle of the night. It's not going to give me those best looks. And when I've got that best look, when I have that momentum, when I see that tail, let's see if it lines up on the 5-1 again, guys. That's, oh my gosh, that's like midnight. These are patterns that repeat themselves every day. They repeat themselves on every market. They repeat themselves on every time frame. And they create a statistical advantage, right? Once again, pull back to support right inside of favorable large triggers, guys. It repeats itself every day. Your job right now is to build trust in the methodology. Your job right now is to create recognition through repetition, to circle those tails, to take those pictures, to ask those questions. And remember that we are not trading tails, guys. We're trading pullbacks to areas inside of favorable large triggers. They just look like a tail after the fact on the 13-2. If you try to trade those tails, you're going to miss the trade. Guys, is everybody comfortable? High probability trend trade. 3 simple rules, 3 advantages. Giving you the highest chance of success as a new user, guys. My hope, my wish, my prayer for you is that you embrace this, that you study it, that you recognize it, that you become comfortable with it, so much to the point that you never miss it when it sets up. And you do that through repetition. You do that through picture taking. And most importantly, guys, you do it through participation in the room. Making sure that you are asking questions, seeking help. Tiger Woods had a swing coach, right? Michael Jordan had a free throw coach. Mike Tyson had a boxing coach. I'm showing my age. These are all old athletes. Wayne Gretzky had a coach. Serena Williams has a coach, right? Everybody at the top of their game had somebody looking from the outside in, giving them feedback on everything that they did, guys. Sometimes areas break, right? But look at the reaction to Fibonacci. Now we have odds favorable momentum. Should we walk through it? Smalls below the large are wide. They're angled in the direction of the trend. Price has not reached an area of support. Therefore, I do have a clear path. I do have odds favorable. And guys, my job is to simply wait for the market to come back. I can create a window of opportunity at the time of this reversal bar from the lowest point of the triggers to the highest point of the triggers, right? From the lowest point of resistance to the highest point of resistance. And it means that my stop has to go where the market shouldn't if I decide to take this trade. While the market does what the market does, guys, this is a great time to take a picture to make sure that the advantages are present. To put that checklist on there. Is the market coming from a good top or bottom? Is the market coming from an area termination condition that creates a full reversal that provides odds favorable momentum? It is. Do I have odds favorable momentum? I do. Do I have no termination conditions? Absolutely. Did I have an area inside of favorable large triggers? 100% yes, guys. This is a trade that typically wins 70 to 80% of the time. The flip side of that is this is a trade that has the potential to lose 20 to 30% of the time. I don't base my plan on one trade. I base it on 20 trades, 25 trades, looking at the decisions that I make. Did they follow the rules that give me a statistical advantage? Guys, this one did and this one didn't work. It's going to happen sometime. The picture that I want to see from you guys isn't whether or not the trade won or lost. Guys, that's irrelevant in the beginning. Did you get in at the area inside of favorable large triggers? Did you give yourself every advantage? Did you create an opportunity for success that has been proven to win more than it loses? And if you did, guys, I'll take this loser every time because I know through study and through repetition, if I take 100 of these trades, I'm going to win typically 70 to 80% of them, which means that I'm going to lose 20 to 30% of them, which means it's a cost of doing business. It's like paying rent in your brick and mortar. Does that make sense to everybody? Guys, give me a Y in the room if you see. Every advantage was there, right? Every advantage from my plan was present, obligated to take this trade. One of the hardest things you're going to do as a trader is take a trade with every advantage, and then it's just not going to work, and that's okay. That's why we're on simulator. That's why we're practicing. That's why we're making sure that our entries are what they need to be. But it's trust. Or you hate to wait and get no fill? Absolutely. It happens, right? Guys, these are things that are going to happen to you as a day trader. Taking a loss is a normal part of a positive equity curve. If anyone tells you that you should be having 100% winners, guys, run the other direction. It's just not true. This market still may go down. It just wasn't my trade. It wasn't my money. And that's okay. I'm all right with that. Are there any questions about the high probability trend trade, guys? We have news in 5 minutes. And since we have news in 5 minutes, I'm going to use this as an opportunity to take a break. When I come back, we'll talk about advantages some more. We'll look at your pictures. We'll talk about what we see, what the market is telling us, what the indicators are telling us. And start thinking about questions, guys. If there's something that you want to discuss, let me know. If you're working on a management plan, if you are working on a trade, let me know. Post your pictures, ask your questions. I'll be back this way in about 5 minutes after news releases, and we'll get back at it, guys. All right, we're back. And guys, before we talk about your charts, I want to show you something here. So here we have one of those 50-50 trades, right? And there's going to be a lot of you that are going to be like, oh man, I got to take this trade. It has the potential to break. Look at that momentum. When we talk about a 50-50 trade, remember, it's areas that haven't broken, which means that it's not a clear path. In this particular instance, it's two areas that haven't broken yet. And it looks like the beginning of momentum, right? But guys, that is two problems in your way. There's a divergence, which means now we're compounding it, right? There's a loss of momentum. And then you also, just to make it even bigger, your window of opportunity is pretty big, right? And since it's pretty big, doesn't that mean that your risk goes up exponentially? So think about what you're looking at in this moment, guys, and this is how you're going to begin to do it. Is you're going to say to yourself, all right, what are my advantages? I think I have odds favorable momentum. I like that. That's kind of it, right? I've got problems in the form of two areas that aren't broken. I have problems in the form of a loss of momentum, and I have problems in a pretty big amount of risk. Your job is to say, this one isn't providing a statistical advantage anymore. This is a trade that's giving me more problems than solutions, right? More disadvantages than advantages. And when you talk about a 50-50 trade, I'm going to share these pictures with you because a lot of you want to get into these, right? A lot of you want to take these medium probability trades. This is a great picture. Rule one's met. You have odds favorable momentum. The market is likely to continue in the direction of the trend. But rule number two isn't met, right? You have a 50-50 look. I have odds favorable momentum, but this is an area that hasn't broken. It only has the potential. And there's two areas, which means that the Fibonacci calculations had so many areas that showed up in the calculations that they stacked one on top of the other. So my money's worth a perfect entry on the 5-1. My money is worth not compounding the problems. There should be no divergence on your 5-1, right? There should be a small window of opportunity so that your risk is decreased in this medium probability trade. There should be strong trigger lines, odds favorable momentum on the 5-1. Guys, this is your best look for that first medium probability trade that you're going to take. And then the other part of that, the other part of a 50-50 trade, guys, I want you to get in the habit of asking, where is it coming from? 50-50 trades that don't come from a strong bottom or a strong top are more apt to be unsuccessful. Having the advantage of momentum of a tiny window of opportunity, right? No divergence, strong triggers, everything says up. Guys, that's your best look. So when you're trying to convince yourself to take these 50-50 trades, really do the analysis. Where am I coming from, right? Am I coming from a termination condition that creates a full reversal? Do I have odds favorable momentum? Do I have a small window of opportunity? And if so, make the decision whether or not it's time for you to take a trade. So guys, that's your S&P. I'm going to start scrolling through the market. Not the market, through your pictures. When I do this, I'm trying to show you guys. That's all right. I have to scroll through like this. I have to go from top to bottom and then come back to catch your questions. So what we're going to do is I'm going to take a look at it, and Joel got us started today, guys. This is part of that feedback. Joel took a trade. He posted it in the room, and I want you to see how he did it. He took his checklist and he put it on his chart, and he said, is the market coming from a good top or bottom? He has a termination condition that created a full reversal. The full reversal, everything's pushing down, right? He has odds favorable momentum. He has no termination conditions. And he had a beautiful area for entry inside of favorable large triggers right there on the 5-1. and was able to make money, guys. A 100% high probability trend trade. This is one of those instances where you should be copying his link, right? Go into your spreadsheet, putting it into your favorite looks. This is the look that's going to get me paid more often than it doesn't. Guys, when I steal these, I love to give you credit for it. This is Joel's perfect high probability trend trade short. Beautiful trade, beautiful execution, every advantage. The result that we would expect, right? More often than not. Z coming in. Let's see what you did. This was right around news this morning, guys, and this is a great indication of when everything agrees, it creates an advantage. Z showing great patience, waiting for an area likely to stop the market as it comes through. He takes what's not a high probability trend trade. He takes what is utilizing those lessons of termination conditions and coupling it with a couple other charts, using a higher time frame as that odds favorable momentum, using a mid band on the 13.2. It's just a high probability trend trade using a higher time frame, guys. Using a large chart, refining it on a smaller chart. Z, that's a beautiful trade. Nice job. Gary, termination condition creates a full reversal. Full reversal pushes the market down. That's your 21.3. Your 13.2 says down. Everything says down. And you go short with everything saying up. Am I reading that right? And then you go long. Gary, these are kind of hard to read. I'm seeing nothing but down. And then I'm seeing a short, and then I'm seeing a long. I think maybe I'm confused on where you entered this market. So NASDAQ was up, NASDAQ was up. Everything was up and you went short on accident, or was that a stop? I don't see the entry. I see a short entry right here. Nope, that's a short close. So you had a long entry someplace else, and then another long entry, and you took it up there. Cool. Really difficult to read. Sorry. Guys, when you post your pictures, and Gary knows this is a rarity for Gary. This isn't the normal. When you're posting those pictures, guys, show me your entry chart. Well, you can scroll back though, right? You can scroll back and show me where you entered on the chart. Show me what the conditions were on the chart. Show me what your entry conditions look like. Just because this one, the way it's presented here, is difficult. I'm looking for a short based on the higher time frame, so we've got a lot of confusion. No worries. No problem at all, Gary. And like I said, that's rare for you. So congratulations on the trade. Good job. Good little lesson there. Bobby T says it's going to be an awesome day. Great trade. Stopped out, right? 50-50 from a strong bottom, no divergence. Beautiful trade. Every advantage on a medium probability trade. And then guys, one of the great things about posting in the room, Bobby, there's that exact same trade. I took it because it fit my checklist. It fit my rules. I had the advantage of a strong bottom. I had odds favorable momentum. I had no divergence and a small window of opportunity. And man, I just waited for that market to come get me the exact same way you did. Mine was 56. Where was yours? 55.50? 56 even. Birds of a feather, right? Why did Bobby take the exact same entry that I took? Because the rules were met, guys. That's the only reason to take a trade. And the sad thing is after we got stopped out on this one, the market went down right to Z's entry, right? Z took it a little more aggressive. Beautiful entry from Z, getting into that market from the low point. After that trade doesn't work. Guys, sometimes trades don't work. I waited for every chart to agree the same direction again, and I got it all back. Keeping my head in the game. Waiting for all charts to agree. When the perfect trade, the seemingly perfect trade doesn't work, let everything roll. Get back in the direction of the trade. Losses are a normal part of the equity curve, guys. Don't ever get upset about losses unless you broke the rules. Focus on execution. Don't focus on wins and losses. Focus on execution because you're proving to yourself and you're creating trust that execution provides results. Gap, reversal bar, termination. And that was, Gary, I'm assuming looking for a potential long from a bad top coming to support. But at this point, we're fighting triggers a little bit. I see what you're looking at. And then Z coming through. Let's see what you did, Z. Z taking advantage of that thing that you just pointed out, Gary. Looking for that continuation. Nope, this was the one that Z took earlier. That's his first one. And then when everything said up, you waited to get on the right side of the small triggers, took quick profits and break even, right? Into that termination condition. Giving away the advantage of a clear path, so managed assertively. Nice trade. Guys, this is what we do all day. 50-50 trade, right? Smalls below, large above, 1, 2, 3 areas that hadn't yet broken. Divergence prints. And Gary, you say that the pullback didn't hit the midband, right? But it smacked right into resistance inside of favorable large triggers. And guys, everybody may end up creating their own version of rules. My rules say, look at my large triggers, and the window of opportunity is defined. That's from the bottom of the triggers to the top of the triggers. Whoops. That window of opportunity is defined from the lowest point of resistance to the highest point of resistance. No worries. I'm curious, though, why you singled out the midband. And the only reason I'm doing this is because if the rules say, and your rules may be different, but if the rules say a pullback to an area inside of favorable large triggers, you had that met. Are you only taking trades from a midband? Which is totally cool. I don't mind it at all, but I think you're missing some opportunities, right? For me, this is a 50-50 trade, right? And it's a 50-50 trade not coming from a good top. No worries. That's all I'm asking. It's a 50-50 trade not coming from a good top. It's a 50-50 trade with divergence, right? And you prefer the midband. Totally cool. That's why I ask. Because what I teach is an area inside of favorable large triggers. And guys, what you're going to do is you're going to take the lessons from class, you're going to take the chart reading, the foundation, and you're going to build a plan that suits your needs. Gary's needs are suited with a midband, not Fibonacci resistance. Totally cool. I like it, but I will always ask if it deviates because I love to have clarity on your rules so I can hold you accountable for your rules. Because when you're consistent, great things happen. And then John posted this picture. I want to say this is from yesterday, right? You had a trade that was a solid short trade, guys, but the market had other ideas. Price moves to the wrong side of the large triggers, the wrong side of the synthetics, guys. everything kind of gets wonky on that 5-1. The conditions are no longer met. Waiting for everything to agree again, waiting for everything to go red, waiting for all trigger lines to agree creates an opportunity. Sometimes the difference between success and failure is your ability to do nothing when there's nothing to do. Guys, wait for all charts to agree and life gets easy. Ooh, Gary, listening to me, that's dangerous. Just ask my wife. I'm just saying, there may be opportunities where Fibonacci resistance or one-to-ones is your bounce point. And I watch people miss trades all the time because they're holding out for that mid-band, but the mid-band may not be in the best position. Great picture here, guys. I'd steal this one if I were you. Reminding you that just because one trade doesn't work, there may be another opportunity, right? We saw that earlier on that long that I took. The first long didn't work. It got run over. But when everything agreed, it gave me an opportunity to get my pennies back. Ron C. posting in the room. I bet I know what it looks like. Looks like a big black void. Let's try that again. Feed the gerbils, Ron. They're not spinning the computer fast enough. There we go. Guys, Ron's typically another example of how a great chart read creates advantages. And I want you to see this. When everything says down, when he's coming from a good top, when the path is clear, and when the momentum is there, Ron will take a little chunk. Guys, that's only an 11-tick run. 11 ticks. That's $110 on crude. But it's 2 contracts. That's a $220 trade over the course of about 8 seconds. Using clear path, using momentum, taking his little bit out of it. I love these trades. And they all stem from chart reading, guys. 100%. They come from chart reading. It's a base hit. But what's 4 base hits? It's a home run, right? Every trade doesn't have to make you $1,000, guys. You can make $100 10 times, and there's $1,000. Jose, high probability trend trade. Odds favorable. You're into a termination condition, just about. You are on the 13-2. Great entries create manageable trades. Can't say that enough. Momentum increases the odds, right? Jose's one challenge is that fib. He's coming into it with odds favorable. He's coming into it with strong triggers, and he has the smallest area for potential entry. Jose says, I'm willing to risk my money with the momentum, with the direction, with the top. Beautiful entries create low risk. Low risk creates a manageable trade. Jose, beautiful execution on a trade where you gave away the advantage of a clear path. Your ability to read your charts to gauge these advantages, guys, will change your perception of what's possible, right? Of what's acceptable. Nice trade, Jose. Do you notice, though, and I always ask, do you notice that you didn't talk about the termination conditions when you annotated? You talked about an okay top. You talked about momentum. You even called it a high probability trend trade. You didn't make any reference of the termination condition. I think it's important to put that on there. I think it's important to annotate that you gave away the advantage of a clear path. And then even more so, Jose, and this is a growth process for everybody, talk about why you took it anyway, right? I recognize that it was a termination condition, but because of the momentum, because of the direction, because of the strength, because of the small area inside, because of the odds favorable on my 13 range and the pullback to the small triggers, I was willing to take this trade. It's important that what you do is repeatable, right? That what you do can be proven to win more than it loses over a course of time. And that's all I'm saying here. I like the way you did it, Jose. I think the execution is solid. But talk about everything you see. Talk about the bad along with the good, and what it does is it puts you in a position to be comfortable with what you're doing. Gary, another NASDAQ trade. Your 13.2 had divergence pulling back. Your 21 range is on the wrong side of the large. It's hard to gauge this one. You have a bad bottom into a mid-band with a gap theory. But your 8.2 set up, without a doubt, and I'm trying to figure out. Gary, if you'll do me a favor, if you're looking for feedback on these trades, will you put your rules on them? Let me know why you're getting in. Because that is 13,895. 13,895 appears to be all the way down here. 96.75. Here we go. 96.75. It helps me to understand, or even a circle so that I can see the conditions rather than trying to line up the prices, because that's a 96 fib, that's a 96 fib. So I'm assuming that the entry is right here, which looks pretty solid, right? Everything says up, everything says up. That makes sense to me. And then at 96, I'm inclined to think that your 21 range was all pointing down. And then at 96, you were in the middle of that gap theory from a bad bottom. I think one thing that I've noticed on the NASDAQ is that when all your charts agree, your chance of success goes up a lot. When you start getting indecision on those charts, when you start getting charts where 2 out of 3 agree, I've noticed that the win percentage goes down. Not a termination condition, right, Gary? That's a target, not a term. This is a 50-50. Price has to reach the area for it to be a termination condition. I love that. Such a great lesson. All charts agree, all charts agree, all charts agree. And you were looking for an opportunity, but not going into that termination condition there. And then did we get a spot, maybe a little momentum at 59? When the areas break, looking to go down. That little stab back right there was probably your best chance. And if you caught it, I imagine that was super fast. It worked out pretty good for you. Guys, I appreciate when you post charts that aren't high probability trend trades, because what we can do is we can bring it all back to chart reading, right? Jose, beautiful trade. Beautiful trade, perfect entry, acceptable losses, cost of doing business. This is the same trade, guys, that we watched happen in the moment. Fits the rules 100%, every advantage present. And this is what I want to do. This one didn't win, but you know what? This was a high probability trend trade. This is a trade that typically wins 70 to 80% of the time. And this was a rock star entry. Jose's perfect high probability trend trade short, and then I'm going to annotate it. Didn't work because I'm training my brain to recognize the entries, to recognize the advantages. And even though it lost, Jose posted it because Jose said, you know what, Mark? I dare you, triple dog dare you to try and pull this one apart and make it seem as though I made a mistake. Because he didn't. Joel had odds favorable. And Joel, you did have a termination condition that created a full reversal, which means you even had an extra advantage. You had no termination conditions in the way, and you had an area for entry. And Joel, you took the perfect entry. Right on, Gary. I like going sim only on a new market too. I think that helps. Joel, can I ask you, Jose, can I ask you, would you take this trade again if it set up the exact same way? I would. Without question, it fits the checklist. When it lost, did you wonder what you did wrong? Because sometimes I do. Joel, you didn't? In the beginning, I did. When I lost a trade, I figured that it had to be me, right? What did I do wrong? What rule did I break? You didn't. This is where that checklist helps, guys. If you can put it up against the checklist and the checklist has been proven to win more than it loses, it makes losses easier to handle, right? You don't worry about whether you win or lose. You worry about the execution because the execution has been proven to win more than it loses. Does that make sense for you new users? Man, Joel, you're killing it lately. You're consistent. Feels good, doesn't it? And can I tell you that a month ago, Joel, you would have been disappointed in this result. And guys, that's progress. When you stop worrying about the the result and you start focusing on the execution, man, mentally, it strengthens your game a lot. Because it means that you trust your rules, right? It means that you believe in them, that you know that they win more than they lose. Let me figure out where we're at here. Sometimes I get lost in the pictures, guys. Jose's got one for me. Jose says 50-50, no divergence, perfect entry, money made, consistency. Jose, beautiful execution on a 50-50 trade. No divergence, and you waited for the pullback to the large triggers and the resistance right at it. And you made money all the way down. Gosh, this is perfect. I'm taking it, Jose. Jose, you're filling my spreadsheet today. Guys, if you don't understand what's happening in these pictures, I need you to raise your hand, right? That was Jose's perfect 50-50 entry. Beautiful. Great execution, Jose. Nice job. All right, Safia, let's see what you did. Safia says, Jose's not the only one, right? You do have terminations on your 21, pretty clear. You do have termination conditions on your 13-2, pretty clear. You do have termination conditions on, look at that. Safia, you're running head first into fibs everywhere. And then you get paid anyway. There we go. Guys, sometimes it works, right? Can we turn it into a chart read, Safia? Not even a 50-50, Paul. And let's keep it on 2 charts. That's a termination condition, right? That just, you can see it visually. It didn't come forward. I don't know what that means. This fib didn't extend all the way here. Is that what you're saying? So it wasn't a 13-2 native fib? Good top, no. Odds favorable, yes. Area favorable. Inside of favorable large triggers. Waiting for the area to clear on the 13-2, but it got you. So termination condition. Do you notice that you didn't identify your termination conditions in the annotation, right? Waiting for the area to clear on the 13-2, but it got me. No termination. Okay, no, there it is. So you had an order waiting in case it cleared. You had already put it in. Is that right? No, that's okay. So, okay. If you have the order waiting, you have to be prepared to take the trade, right? Because if this termination condition works, it's going to hit the order. Does that make, am I saying that right? If I have an order waiting with the rules not met, hoping that the rules become true to get me in, but they never do, then I'm breaking rules. You weren't anticipating this area to hold with no triggers through, with a pivot stop out, with the smalls on the wrong side. Does that make sense? But it never did, right? So maybe I'm not verbalizing it the way I think that I should. So let me do this. Let me see if I can find an example of what I'm trying to say. So this is a termination condition, right? We've got a pivot stop out. It's at support. If right here, I'm hoping that this area clears, right? And I put an order in and I'm waiting and I'm saying, well, I sure hope my rules ultimately end up being met. I certainly hope that at some point these rules are true. And the market keeps going. It's like, oh, look, there it goes. Son of a gun. It was never true and it did exactly what it probably should have. Then I just get run over on a rules broken trade, right? I like the idea of anticipating. Like you can anticipate if then. If this breaks, well, then I'll look for a trade, right? If this breaks, then I'll start, then I'll get my order ready. If this breaks, I'll get my order ready. But if you put that order out there too soon and your rules aren't met, I feel like there needs to be some sort of willingness to cancel that order rather than just keeping it. Termination condition, termination condition, termination condition, termination condition. Does that make sense, Safia? Because it's like you're saying, no matter what happens, whether it clears or not, I'm still going to take that short. And you got away with one that time. You really did. And when you get lucky, it's fun. But that one held, and that one held, and this one held, and that one held, right? That pivot stop out worked. That one held. That one held. That one held. So it's easy to go through that process. And remember that everything creates a statistical advantage. And I'm not trying to chastise. I hope it doesn't feel that way, and I hope it doesn't feel like I'm beating you up here. But termination conditions hold more often than they break, right? Especially when they're perfect, no triggers through. Not only are you giving away an advantage, but you're giving it away a really strong advantage. That bounce, even if it continues back down, may be problematic for you. So just thinking in terms of advantages, and we probably spent too long on that one, and you took a winner, and that was great. But of course, my goal for everybody is longevity and giving feedback, right? I'm a big fan of termination conditions because I think that that clear path is pretty key, right? Smalls never got through. We had this talk yesterday. I like this talk a lot. Do you guys see how the smalls tried to get through resistance, but they never fully made it, right? One fit through the door, but then you went back into the room. That's not a broken area. That's not a 50-50 trade. This is a termination condition, 100%. And look at how the price reacts to it. It pushes back to Fibonacci, right? And it gives it a little bounce. And then it pushes so much lower. And now price is coming back into resistance, and the trigger lines are all below it. And this is kind of price reacts to resistance. The buyers are pushing up. They hit resistance. And the sellers, guys, those deep pocket people, they know about 72.35. And they fought back and pushed it all the way back to 72.02. At which point, the buyers fought back. And they pushed it all the way back up to that area of resistance again, right? Not a 50-50 trade, no reason to lose it, right? And now we're kind of the larger up at the smaller below, the smaller down, the larger up. We've got this indecision right now. We're waiting to see if 72.35 is actually going to break or if it's actually going to hold and create a top, right? And we're coming from a pivot stop out at support. Do you see how it's almost as though the market is whittling itself down into a little bit of a range from resistance to support to resistance to a loss of momentum? And we're just waiting to see how that crude oil is going to react. Waiting to see if they want to push it up, if they want to push it down. I'm not in control. My larger up, my smaller below, my background's red, my triggers are green. Guys, I don't have the information to feel like I have an advantage. So I'm waiting for these guys, to figure out what the heck they want to do, guys. These are the guys that move the market. This is the big crowd. These are the deep pockets. The sharks, these are the guys that create momentum, that identify these Fibonacci areas and react to them. These are the guys that help me decide whether or not I have a clear path. All I have to do is be a remora, right? Take a little chunk out of that market. When the sharks tell me I have advantages, when I have momentum created by him, when I have a clear path identified by him, I'm just going to grab that little bit. I'm going to wait for the indecision to simmer down. I'm going to wait for the path to clear. And when the path clears and the momentum's there, guys, I'm going to look to take advantage. Pivot stop out at support. Isn't this the same look that's happening on crude, guys? The larger down, the smaller up, resistance is holding, support is holding. And look at what it does on your 5-1. Looks like a seismograph. That smaller, faster chart is pretty clearly showing you the indecision coming in the market right here. The synthetics are down, the larger up, resistance is held, support is held, multiple divergences, son of a gun. Guys, the hardest thing about being a trader is doing nothing when there's nothing to do. I feel like I say that every day. I feel like I'm going to say it one more time. So while we wait for the market to make up its mind, guys, what do you want to talk about? Termination conditions might be a great lesson right now, don't you think? Because we've got them everywhere. Here's a picture of termination conditions at a high, guys. Steal this picture, put it in your checklist or your spreadsheet. A pivot with divergence is not a termination condition, right? It's simply a change of direction with a loss of momentum. But when price reaches that pivot, that divergence high, and the trigger lines don't break through, now it's a termination condition. Now it's an area with the potential to reverse the market. Price reaches resistance, trigger lines below, it's a termination condition. Price reaches 1-to-1s, triggers below, not going long. And look at this, guys. Price pulls all the way back to support. None of the trigger lines follow. I'm not going short either. I'm in a holding pattern. I'm waiting for the market to give me a statistical advantage. Price reaches support. None of the trigger lines break. Creates a full reversal. Strong bottom. Support. None of the trigger lines break. Creates a full reversal, strong bottom. Just a pivot, now a termination condition, creates a full reversal, strong bottom. Two-part process, guys. It's written on both of these pictures. The recipe for a termination condition, the recipe for identifying where the market is likely to stop, removing you of your advantage of a clear path. Now this termination condition, it's threatening to create a full reversal, right? And if it creates a full reversal and gives me odds favorable momentum and a clear path, well then I'm going to look for a high probability trend trade. Now we've got that full reversal. Now we have odds favorable momentum. My smalls are through the area, but my large are not. Right now I'm in a 50-50 scenario. I have areas with the potential to break. This fib, these 1-to-1s. but they haven't broken yet. What's a potential window of opportunity look like right now on the 5-1? Let's see. From the highest point of support right there at those large triggers. Holy smokes. Look at the size of that window. It may change as the market moves up. Is anybody in this room willing to put 6 points of risk on a medium probability trade? If you're not, this probably isn't your trade. But as the market moves up, watch your large triggers, guys. They just pulled this bottom area of Fibonacci support out of the equation. Your window just shrank a little bit, didn't it? That feels better. You just cut your risk in half because this area is not inside of favorable large triggers. The large triggers have exceeded and gone beyond. Now they're beginning to overlap. There's divergence potential though. And how many areas aren't broken? 48 isn't broken. 47.24 isn't broken. 46 isn't broken. Always going through this, guys. Where am I coming from? I'm coming from a termination condition that created a full reversal. I do have odds favorable momentum, right? I can clearly define a window of opportunity before a reversal bar ever prints. I can see by these flashing negative numbers that divergence potential is real, and there it is. Now it's divergence on a 50-50 with 3 areas that aren't broken. What does your plan say? The market just zipped right through the top of your window. What does your plan say about this trade? Do you have a plan for 50-50 trades? Have you written it out? Great opportunity to share what I call the KISS trading plan, the Keep It Simple Sunshine plan. My plan starts with a high probability trend trade, right? I even put a note at the top that I'm never going to fight direction or triggers, guys. Here's that high probability trend trade, pictures of a short, pictures of a long, simple plan, high probability results, mechanical management, right? I can change this plan as I grow with the software. If I add a trade, I add a checklist. Here's my 50-50. One area not broken. It even says it at the top. One area not broken. Do I have momentum on both charts? Do I have no divergence on my small chart? Am I coming from a good top or bottom? If so, enter at the area. If there's divergence, there's no trade. And once again, there's pictures of the trade. And if I take a medium probability trade, guys, I have a different management plan for it. This is the, I'm just beyond beginner. I'm ready to start working a 50-50 trade plan for you guys. This one worked its way up, didn't it? That pivot stop out has a lot to do with it. Where am I coming from? Some of you took this trade. Some of you chose not to. Both of you are right. What's your plan? What's your first trouble spot, right? What's a condition that'll pull you out? But momentum sure does help, doesn't it? Gary said, I'll take that one. Oh, this is crude oil. Great bottom. Then a third higher divergence. Do we remember that pattern? Everything says up. Every chart agrees. Gary takes the long. Great trade, Gary. Paul. Same thing. No worries, Jose. Paul, what's the definition for a good bottom? Remember, let's keep it simple. A good bottom is a termination condition that creates a full reversal, right? This is a good bottom. One tick off of support. Pivot stop out at support, full reversal, giddy up, right? This is a higher divergence, which is great because that's actually 3. And then up here is where every chart agrees, right? Every chart agrees. Not a good bottom, Paul. It just doesn't fit the clinical definition. And then Gary and everybody that takes this trade, right? It's the beginning of that odds favorable, and you do have a clear path. There's 2 divergences in the same location. This is where saying something clever like, if a third divergence prints, maybe I don't hold the trade. Guys, your S&P made it to the target. 50-50 trade for the win. And then guys, Gary, your trade made it to the target, right to the divergence high. And stopped right off that key. Great trading, guys. And the idea is that every chart agrees. Every chart says up. Every chart's either has momentum or is at the beginning of the momentum. The path is clear. The bottom is good. The results are real. Great trade, Gary. And Jose, that's one of the pitfalls, isn't it? One of the pitfalls of watching multiple markets is that you're probably going to miss a trade every now and then. Because sometimes the markets are going to be doing the right thing at the right time at the same time. And you can't spread yourself thin. The other day I found myself in an S&P trade, a crude oil trade, and a gold trade at the same time. And it was an absolute nightmare to try and manage them. But they were all high probability. I had my stops in place. I had my targets in place. 2 out of the 3 won. It turned out to be a pretty good day. But that's hard to do, guys, if you're not comfortable with everything. If you're not so confident in your plan, your stops, your targets, that you can ignore them for a few minutes, focus on one. Great trade, though. Notice how everything says up. Window of opportunity is virtually nothing. Smalls are outside of the large. The path is clear on the 13-2. Gold trades well in the AM. Trades well in the afternoon, too. It's when everybody's in there crazy. Gold can be a little temperamental. Gold is like the NASDAQ's little stepbrother who doesn't know why he wants to be a jerk, but because NASDAQ's a jerk, he's working on it. He's just not as good at it. Guys, if you took the 50-50 from the pivot stop out, coming from a termination condition helps your chances, right? Odds favorable momentum helped your chances. Strong triggers helped your chances. But you had to be willing to fight the momentum, and you had to be willing to fight a pretty big window of opportunity. If you did and you got in at the highest point of support because of the momentum, congratulations, target reached. If this one doesn't fit your plan, and I know a lot of you it doesn't fit your plan, you have to be okay with having not taken this trade. You don't get to have remorse when you follow your rules, guys, because remember, the rules are the only thing that you have. They have been proven to win more than they lose. They better be if they're your rules. And the goal is to stop worrying about wins and losses, guys, because you're always taking the right trades. You're always following the rules. Focus on execution, because your execution of a methodology that's been proven to win more than it loses should be execution that provides you with a positive equity overall. Get yourself prepared mentally, financially, that you won't win every trade. Termination condition to the tick. I know there's some of you that are already in the trade that said with that much momentum, it's likely to retest, right? Some of you are saying that. With that much momentum, I'll enter at 19.25, at least for a retest, and I'll wait for some sort of divergence to take me out. You're waiting, Safia? I assumed you would be long. Oh, you. I recognize patterns in people, guys. My thing was trading in determination conditions. True story. This section, stop 5-1 trend trades if, right? Termination looks. Let me see if I can make that. Stop 5-1 trend trades if. Guys, when I started day trading, when I was first learning the software, I can't tell you how many termination conditions I traded into. And I never knew. I always thought that I was losing because the market hated me. I thought I was losing because I was, I don't know, functionally retarded. Something was going on. But it wasn't termination conditions, right? Because I hadn't even learned how to identify them. I started posting my pictures in the classroom because when I started learning the software, John Novak ran this room. And he told me, he said, dude, just post pictures, get feedback. Stop sending them to me on Skype. I'm teaching a class. So I'd send him my pictures. And on Monday, he'd go, hey, Mark, your trading in determination conditions is taking away your advantages. That's why you're losing these trades, because you're not giving yourself room to a target. There is no clear path. And then Tuesday, he'd tell me the same thing. And Wednesday, he'd tell me the same thing. And Thursday, he'd tell me the same thing. Well, by the time Friday came around, 3 months later, I believed him. And I started annotating every one of my charts with termination conditions. And I'm fairly certain that's why this is on the spreadsheet. And that was my thing. That was my pattern. My pattern was trading in determination conditions. And when I got rid of that pattern in my life, my win percentage went up dramatically. I like that one, Safia. I mean, that was that 50-50 long, right? You had terminations everywhere coming from a super strong bottom. Everything set up. The momentum was overwhelming. Guys, my plan, I will take trades with divergence if the conditions are right, but you have to be able to answer the questions. Has anyone ever heard John Novak say, where are we coming from? Where are we coming from? Ask yourself, where am I coming from? Am I coming from a strong top or bottom? It increases my chances of success. Do I have odds favorable momentum? It increases my chances of success. Do I have no termination conditions? It increases my chances of success. Use the language. Like, don't be afraid to say, this is going to give me a better chance of winning. Embrace it. I love this picture. And you're just waiting for it to clear, right? You're saying, hey, it's a termination. Let's give it a minute. Why not? Statistical advantages. They're amazing. And it hasn't cleared yet, has it? Patience paying off. Got in here and I was like, woohoo, here we go. Son of a gun. I'm out of that trade. Let it work itself out, guys. Go make a sandwich. Stand up, stretch, put your hands over your head, get the blood out of your hands, right? Breathe deep. In through your mouth, out through your nose. Hum a show tune. Do anything. You have a voice telling you to wait. I do too. Do you know what my voice is, guys? True story. When I'm trading and I'm like, man, I just want to do something stupid. I just want to trade into a termination conditions. I'm like, I can't go to class tomorrow and tell these guys to follow rules if I'm breaking mine. That doesn't feel right. I hear John Novak in the back of my head. He's not as warm fuzzy as I am. Like, why'd you trade into that big red line, dummy? Like, John, I'm sorry. I hoped it would break. I was wishing for it to break. I wanted it to break. And it turns out that the market doesn't care what I want. It doesn't care what you want. The market's going to do what the market does, guys. We're going to wait for statistical advantages. We're going to wait for a pattern that's been proven to win more than it loses. I was talking to a guy that works at the shop I work at. And he goes, man, day trading feels like gambling. right? Wishes cost money. He goes, it just feels like gambling. And I was like, you know what? I think that's pretty common. That it feels like gambling. Because most people are familiar with, I do now, Paul. Ninja Trader got rid of their calendar. But here's the CME's one. That'll help. Bookmark it. I hear that a lot. It's like gambling. It's like gambling. It's like gambling. Yeah, Ninja Trader, they changed it. All of our links stop. And I say to myself, you know what? Gambling and trading are two different things. And why are they two different things? Because gambling relies on chance, right? Gambling relies on you either win or you lose, and you really don't have a lot of control over it. You don't control what cards come out of the deck, unless you're a card counter or something. You don't control where that little marble stops, right? It's up to inertia and luck, and that's it. That's the only thing controlling it. Guys, when you're trading futures, you can identify a pattern that has been proven to win more than it loses, right? If you flip a coin, you have a 50-50 chance. If you weight one side of the coin, then one side produces a statistical advantage, right? So you always bet on that side because the odds are favorable that it's going to win more than it loses. It probably won't do it every time, but you've created an advantage. Guys, these patterns repeat themselves every day. These patterns are a reflection of psychology. These patterns have been proven to win more than they lose. Termination conditions have been proven to stop the market more than they don't. Weak triggers have proven to be a precursor for a reversal more times than they're not. And odds favorable momentum has been proven to push that market in the direction of the trend more often than it doesn't, right? So statistical advantage, never a guarantee, but certainly creating an edge. Trading is like poker, Texas Hold'em. Well, so Conrad, in Texas Hold'em, if you have a certain set of cards, it creates an advantage, yes? If you have a certain look, it creates an advantage. I don't play Texas Hold'em. I don't get it. But people, and what's the one thing that happens? If you don't have that advantage, Conrad, what do? Fold. You get the hell out of it because that advantage isn't present anymore. Pretty good analogy, right? Don't force stuff. You either have the advantage or you don't. So I went and played golf on Tuesday. This is partially a brag, but it's also a good lesson. I have been fighting the process since I had my midlife crisis and started golfing again. I have been fighting the idea that taking it easy, keeping it simple is the way to have a good golf swing, for me to get the results I want. But instead, I embrace my testosterone and I swing that club at that little ball like I'm trying to kill it. And as a result, my results haven't been great, right? So Tuesday, I go out to the golf course and I've had this epiphany. I had this epiphany 6 months ago, but I haven't been able to control it physically. Tuesday, I go out to the golf course, and before every swing, I tell myself, swing lazy, swing lazy, swing lazy. Don't swing hard, swing lazy. Which is kind of the equivalent of saying, hey, make sure that the checklist is taken care of before you get in the trade. Make sure that your mind's right before you take the swing. Guys, Tuesday, I shot the lowest round of golf that I've shot since I've picked the game back up. I shot an 86. It was amazing. It was magical. When I finally embraced the process and stopped trying to impose my will on the market, on the golf club, it became easy. And the results followed. Gary, terminations, 3 divergences. Isn't it amazing that you were able to take the trade right up to the trouble spot, and that trouble spot was an amazing spot to take profits. Gary, you knew where the market was likely to go. You had a statistical advantage. You knew that it was likely to continue because of where it was coming from and the look of the trigger lines, and you knew right where it was likely to continue. Guys, if that's not chart reading, if that's not taking a very simple basic concept and turning it into money in the bank, I don't know what is. Did it feel like gambling, Gary? Or did it feel like advantages? Nope. Paul, it's patience, right? It's the patience to wait for things to be correct. It's the patience to wait for the advantages to be present. And then the people that wait for those advantages find themselves in a good spot. And then Conrad, you like being able to count the chips? I like it. And you know what? When you have a better plan in place, it won't be all those cute $5 chips. We're going to put a couple zeros behind those fives, right? It's all advantages. Look at how much nonsense happened off of Fibonacci. Look at how much the market reacted off of Fibonacci. Look how little happened once that area cleared. Price reacts to Fibonacci, guys, and deep pocket investors react to Fibonacci. There's no reason at all for you to get run over into an area because you see that area days before the market gets there. All right, I'm going to take a break. We're going to go into the second half of the day. A really smart guy gave you this. Thank you, John Nova. Actually, you know what? This one's mine. So, a guy of average intelligence created this checklist. Guys, this checklist was created because I did a private session with a gentleman that was chasing everything. Everything. Are you out of here, Joel? Great trading today. Nice job. Solid work. Celebrate it. Feel good about it. Guys, this checklist came to be because a guy, some of you know Mark Dean, you work with him. Mark Dean said, Mark, I've got this guy and he just needs help. He just needs to refocus. And I got on the phone with him and I said, hey, show me some pictures of what you're doing. And he showed me 10 different pictures with 10 different trades, with 10 different entries, with 10 different managements. And he goes, I can't figure out why I'm not winning, Mark. I can't figure out why this is so damn hard for me. And I said, well, let's go through your pictures because you have 10 scenarios, which means that there's probably 3 to 4 rules for each scenarios, which means that every time you look at a screen, you're trying to process 40 or 50 things to take a trade. And you're trying to take all the trades. I said, what if the only thing you had to do was process 3 or 4, right? 3 or 4 simple things only on 2 charts. What if that's all your brain had to focus on? Would it help? And he goes, I bet it would. I think it would help. I said, okay, so let's come up with what it's going to take to get you in the market. And we created this checklist. We created it together over the phone in a matter of minutes. And we created this example plan in a matter of minutes, guys. In simplicity. I talked to that same gentleman a month later after simplicity, and he committed, and that was half of it. He had to commit to the look. After a month of keeping it simple, of focusing only on the absolute best, I think that he was 87% winners. And his hair was starting to grow back, and he didn't have, finger grab marks in his desk. Guys, simplicity has been a proven recipe for success for as long as I can remember. Embrace it. But on that note, I'm going to simply go refill my water. And I'm going to give you a little time to reflect, right? Jose, I can't. You know they tattoo scalps now? Have you seen that? Scalp pigmentation? I've got a buddy that does it. Man, Michael Jordan made it okay to be bald. It looks pretty bad, yeah. Michael Jordan made it okay to be bald in the 90s. When he shaved his head, I really think, like, nobody looks at bald guys anymore and goes, oh, he's bald. They're like, all right, that's a good looking guy. He just doesn't have hair. True story. So, Jose, you're bald in the right generation. Mine just turned gray. But anyway, I digress. Guys, I'm going to take a break. If you have questions, post them in the room. If there's something that you want to talk about, let me know. Um, Last hour is going to belong to you. I'm going to take a little bit of a break, watch the market, see what it does. I'll be back in about 5 minutes or so. All right, y'all, here we go. Last hour. Let's talk about what you want to talk about. Let's talk about advantages. Let's talk about disadvantages. Let's talk about whatever you need to get you in the mindset to do what you need to do to find success, right? What are the things that are easy for you? What are the things that make you comfortable? Embrace those, right? Capitalize on your strengths. What are the things that give you challenges? What do we see happening right now? I have anything can happen triggers, right? I don't have odds favorable momentum. I know that in that three-part equation, one part's already missing. I do have a clear path, right? And I do have an area right there inside of those large triggers, but I've really forfeited momentum. So if all that momentum is gone, it's easy to say what the advantage is, but let's just talk about this. If all that momentum is gone, and it's the momentum that pushes the market up, when that momentum begins to go away, doesn't it make sense that the market may push down to here? Or maybe it pushes lower to here? Or maybe it even pushes lower all the way down to the mid-band or the next area? And because the small triggers are inside the large here, we begin to take away those advantages. What's going to be that area? Where is it potentially going to bounce? Or is this overrun? Is the market done on its move up? And that's how I think about it. Not only what are my advantages, right? But what are the potential disadvantages and what is the repercussion of not having momentum? What is the repercussion of not having a clear path? What's the repercussion of not taking a trade from an area inside of favorable large triggers? If you train your brain to begin thinking this way, to think in terms of advantages and advantages gone, I think it makes the trading day easier. I think it makes management easier because when you embrace the advantages and you know the potential that comes with them, it's easier to hold a trade, right? It's easier to stay focused on looking for that success. And when you identify the disadvantages and you understand the potential challenges that comes with it, it makes it easier to make decisions on entries, on management, on stuff like that. So don't be afraid to use that language a little bit. This is my advantage. This is my advantage. And then when you enter a trade, my favorite phrase, and Sophia, this is the one that you circled, and I know that some of you took it. I think Gary took this one all the way up. Is once you're in a trade, right? Every great entry creates a management opportunity. Every great entry does that. If I'm in this trade, guys, I'm off the cuff making a management lesson here. If I chose to take this entry, my stop's where the market shouldn't go, right? Once I get a reversal bar, it's below this reversal bar. This is where I'm at. When the market hits one-to-ones, I ask myself, what changed? And I can answer pretty honestly, nothing changed. I'm going to stay in this trade. When price reaches this divergence high, I ask myself, what changed? I've actually created an advantage, right? Now my smalls are in favor as well. So as I manage the trade, what changed? What changed? What changed? What didn't change? Where are my advantages? And then when price reaches here, well, I know that I reached an area of resistance with absolutely no trigger lines through. And guys, this becomes a target area, right? So on that same notion, what changed? If I'm thinking about this entry, well, I've given away the clear path. I'm losing momentum. My window is huge. Guys, this is a great management tool as you're in the trade in the moment, is just constantly ask yourself, what changed? From the point where I got in until the point where it's time to get out, what changed? Guys, Resistance to the tick. Does Fibonacci work? You're gosh darn right it does. Look at that. To the tick. Look at the reaction. Why don't I trade into termination conditions? That's why right there, guys. Exhibit A. And look at how you can start compounding, right? You don't have the advantage of momentum. You don't have the advantage of clear path. And guys, I promise you there's at least one person in this room that entered the market right here hoping that it would continue up. Anybody? Does anybody want to admit it? Guys, that was my trade a while back. I would take this trade and have absolutely no idea why I just got my butt kicked. So where are we coming from? We're coming from a good top. We have odds favorable momentum, and we are in a 50-50 scenario. Maybe not. Those small triggers haven't really made it through. It's close. My large triggers are all the way up here at that reversal bar marker, which means that price has accelerated away and reached an area, and there's a potential that it may pull back. If nothing else, guys, it gives me the patience to sit on my hands and see if there's any areas inside of favorable large triggers at the time of that pullback. And it keeps me from jumping into that trade too terribly early. I know a lot of you are looking for momentum style trades coming off of that mid band, right, after a termination condition. So now you have to weigh it out. Is momentum more likely to win than that pullback to the large triggers using Fibonacci? I don't know the answer. And since I don't know the answer, I'm going to go with what I know. And I'm going to sit on my hands and I'm going to be willing to miss one. Some of you say, with that great top and this momentum, I'm willing to get in early. And I'll manage it assertively. It's up to you. You got 37 people in the room right now, guys. I've seen trades from 5 of you. Is anyone else trading? Does anybody else have a picture they want to question? You know, maybe you have a question about something. Does anybody have a concept they want to talk about? Does anybody have a trade set up? Maybe? No? Cool. I'm going to go mic silence for a minute, guys. I'm going to watch and see what this market does. If you have a question, post it in the room. If you have a picture, post it in the room. But this last hour belongs to you. You tell me what you want to talk about. I'll be here. I'll be watching. I'm going to hit that mute button, though. Hitting the mute and somebody gives me a picture. Gary, there was all those divergences, right? Made it up to that next area. As the market's pushing down, we haven't reached, right? It's a 50-50. No divergence. And you're looking at that reversal bar coming right off of support, 50-50 with multiple areas that haven't broken yet. And you're just waiting. You're going to wait for that trend trade, right? Not looking for a long. Just kind of hanging out, wait for things to happen. I like it. A little bit of patience, guys. It's okay to have a plan in place, right? What am I going to look for? What's got to happen? Gary just uses a checklist. He says, this is what my checklist says. This is what I'm going to do. Where's the market coming from? It's coming from a good top, isn't it? If you took the 50-50 trade, you probably took $100 at 29, and you're probably break even at this point. Because it's a 50-50 from a good top. But man, 1, 2, 3 areas not broken yet. It's all right to let it sort itself out. I'm looking through my names. Do I have anyone in here on a demo right now? Anybody in their first month trying to figure things out? No. It's interesting to me some days that I have to beg people to ask for help with their trading. Little momentum off the mid-band worked, right? Quick little shot, quick profits. Now the momentum is gone. Divergence is printed. We're on a 50-50. Those areas are above us. We are coming from a good top. All I'm doing is reading charts. The trend is down. I know the trend is down because the background's red, which means that I am not looking for long trades. I'm not hoping to mid-band holes to rocket me to the moon. I know that momentum is down because my small triggers are below the large triggers. The large triggers are wide. They're angled in the direction of the trend. Looks just like the pictures in the manual. I know that my path isn't clear because the large triggers haven't broken 55-58, nor have they broken the 53 area. So even though I have a good top or bottom and I don't have a clear path, I do have odds favorable momentum. So now I go through the if then. What does my checklist say? Jose, I knew you would be in that trade. Perfect. When I was saying some of you were going short at the mid-band, Jose, you were the some of you I was thinking about. Perfect execution, Jose. That's all right. Keep taking it. That's the one, right? That's the look. That's that first shot. That's that first shot when all that momentum off a good top is pushing it down. And you handled it beautifully. Quick profits. I love that you use the small triggers against you for it. And then you're not willing to give it back, right? At this point with divergence, let's wait. Let's wait for the rules to be met for something a little more high probability. Beautiful execution, Jose. Feels good when a plan comes into place, right? Making sure I'm not muted. Now we have divergence on a 50-50, right? That momentum style's off the table because we've lost momentum. So now what has to happen, guys? Now we have a good top, odds favorable. We have a 50-50 look with a divergence. Go through your rules. Look at your checklist. What does your checklist say about a 50-50 with divergence? Does it being from a good top help the case? Does for me. This look right here makes me feel better about this look here. Why? Because it hit Fibonacci to the tick. Because the buyers lost momentum at Fibonacci resistance. Because the market has an insane amount of momentum. And because I can identify areas inside of favorable large triggers where it's likely to continue. If that top really is the top for the day, I know where my best chance of success is. And I do that through chart reading, right? Through understanding where the market is likely to continue, where it's likely to go, where it's likely to stop. Jose, let's see what you did. 50-50 at a termination condition because every chart agreed. You were willing to take a shot. You took that shot and you got paid for it. It's ridiculous sometimes, the things that excite me. Guys, this right here. Every chart agrees. Takes a lot of the stress out, doesn't it? Every chart agrees, so I took the trade. Rob K, good morning. I saw you threatening to post a little bit there. Rob, you took the momentum style. Looks a little different. You don't have your synthetic fibs on there, so you can't see what an amazing termination condition that was. Perfect. Perfect, perfect. And Rob, you also don't have your synthetic triggers on the 5-1. You're missing a lot of great information here. But you're absolutely right. It looks like a 50-50, but the only challenge is it's not an area inside of favorable large triggers. So what you're looking at here is that momentum style, that same one that Jose took. I like that you've got quick profits on the first, and we know that that second one didn't get reached. Oh, okay. Got to get you upgraded then, right? I'm sure they showed you, but in case they didn't, guys, if you've got a weak computer, this is my next major purchase, I think, now that I have new golf clubs. That's that easy computer desktop, man. This thing is built. And I know that John Novak is working on a couple things in the background, mimicking some stuff that he used to write into programming for a different platform a long time ago, that hopefully will ease the strain as well. Just wanted to throw that link in there. That's a pretty good one. So yeah, if you're not running the synthetics, Rob, can I show you a trick that'll help you out a little bit? So any place you have a 5-1, yeah, mine too. My video card stinks. It called it a tree trunk. Any place you have a 5-1 fib, just draw a horizontal line so that you can see it on the 13-2. And if nothing else, visually, that'll help you see it, because you were coming from a great termination condition, and that was a beautiful entry. And you took profits on the first, and you're probably break even, looking for that next area. Rob, great trade. Gary, I am too. If you guys had any idea how hard John Novak works, he pops in the room and he's laid back and everything's cool. He's nonstop. I get text messages from John at like 1 in the morning his time. Hey, I just recognized this new pattern. Hey, I'm working on this programming. Hey, I'm doing this so that this is easier. I've put this literature together. I've rewritten this part of the website so that it's more clear than it once was. It's pretty outstanding. He does every now and then. We have the same back. That shortens nights sometimes. That's the one thing. And guys, I'm proud to work here. It's pretty amazing to work for a company that you believe in, that sells a product that you believe in. And I don't have any problems. I don't have any problems looking at myself in the mirror, coming into this room every day, teaching you guys to read indicators. I believe in it wholeheartedly. I really do. I believe in the power of Fibonacci. I believe in the methodology that we teach. And I believe in the path to success. So much so that I tell you guys how to stay on that path every darn day. It's a good feeling. It really is. You ever worked someplace that was shady, or you work someplace and you just don't believe in the product, and you probably didn't work there very long? And guys, that termination condition that created the full reversal sure did push it down, didn't it? Rob K, congratulations, great trade. Profit target hit. If you didn't get the pullback to the area inside of favorable large triggers, guys, you had to watch this one go, right? Your rules weren't met. And if your rules weren't met, it didn't work. You worked for a criminal, couldn't get, well, yeah, you worked for the government, Gary, of course. Ha ha. Bump. Guys, if you didn't give you a rules-based entry, it's not your money. Taxi company. I can't do it. I can't work for people that aren't honest. I can't work for a product that isn't what it says it is. That's just me. Guys, termination conditions for the win. Termination conditions for the win. That's awesome. James Bond kind of stuff. What do you think, guys? Why do I tell you to recognize termination conditions? Why is it so imperative that you learn it? Because look how the market reacts. We saw it on crude, right? We saw it on the S&P. Every day, guys. Every day, every market, every chart. I don't care if you're trading Apple stock or Tesla. Doesn't matter if you're trying to hedge your soybean field, right? Guys, the patterns work. In order to be successful in the market, you need to buy low, you need to sell high. Nexgen shows you where high and low are, guys. Nexgen shows you when you have the advantages, but it also illustrates when those advantages are gone. It negates the need for hope. It negates the need for wishing, for wanting, right? You don't have to rub your rosaries or sacrifice a chicken. All you have to do is follow the rules. Take the advantages, follow the rules, commit to it. Nexgen's trading plan for as long as I can remember has been this: define your termination conditions. Guys, I'm rambling because nobody's showing me anything. That's cool. John's going to send me a text in just a minute going, dude, just shut up. Not going to do it. Define a termination condition. Guys, the triggers have to roll from a high. If those triggers roll from a high, there's that HVA trade. Guys, this is your first opportunity along with that trade Jose just took. That no divergence pullback to an area, guys, that's your first shot from a great termination condition. And then it's trend trades all day until that next termination condition is reached. If this low is really going to be the bottom for the day, it's going to roll and you're going to look for that first shot. And then it's trend trades all day until the next area. Ron C. Golmet, congratulations. Taking chunks. Dunk, dunk, dunk. Dunk, dunk, dunk. Momentum, strong triggers, get in, get out, call it a day. Great trading run. Guys, this plan really hasn't deviated in 20 years. The looks are a little different. 8 base hits today. But you got to learn how to read those indicators. You got to learn what you're looking for. You have to learn the advantages. Once you do that, it gets a little easier. Let's share this one. I haven't shared this one in a while. This is a fun picture. And this is a good one for those of you that are new. And this is a fun one for you guys that have actually been on the struggle. Guys, when you get your software for the very first time, Jason loads it on your computer, you are excited. This looks like fun. I'm going to be a day trader. I've seen Wolf of Wall Street 38 times. That's what I'm going to do. And then you're like, whoa, I got to learn rules. I know, isn't this great? I've got to learn rules. I've got to understand advantages. Man, I thought being a millionaire would take zero effort at all. I thought making $1,000 a day was just something that everybody does, right? And you're like, I'm not sure what I'm doing, but all these other people in the room are making money. I'm going to stick with it. I'm going to try to learn these rules. And right around day 30, let me put my hand up because this was me. Right around day 30, I am a freaking genius. After only 17 days and no pictures and no questions answered, and I don't have a plan, and I don't know how to manage a trade, I don't even know what the hell I'm looking for, I'm going live because on Simulator, I was positive 3 days in a row. Guys, that one cost me $5 grand instantly. $5,000 instantly. This line right here represents 22 trades without a winner. 22 trades, I had no idea why I got in. I had no idea why I got stopped out. 22 trades in a row, guys. And then I lovingly embraced, I don't know shit. And I'm not going to lie to you, I almost quit. I almost said, I can't do this. But the reality is I can do this. Somewhere over here, I didn't give it the effort that it deserved. I didn't give it the study. I didn't use a spreadsheet. I didn't take pictures, and I didn't use the coaching available in class, guys. So right here is where you make a decision, guys. This is your line in the sand. This is your pivotal point. You may hit this more than once if you keep chasing everything. But when you make the decision that I know this works, guys, if you didn't know that it worked, you wouldn't buy the software, right? You know that it works. You know that the plan is true, and you know that it's solid because you did that silly little test that I give you. Can you follow the high probability checklist for 5 days? Tell me your results. Everyone that's been able to pull it off has been better than 80%. Do you know what the reality is, guys? It's like when I was a personal trainer and people used to tell me, Mark, I eat perfect all the time. Mark, my diet is spot on. To which I would lovingly reply, do me a favor, take a picture of everything that you eat for the next 24 hours. Every time you have to chew on something, every time you have to swallow a drink, take a picture and send it to me and let me know what you're doing. Let's make sure your diet's on point. Guys, the average person made it till about 9:30 in the morning on the first day. Because what they realized is that they'd been lying to themselves. That their weight problem was someone else's fault. It wasn't their fault because they were doing it perfect. Guys, that's what posting in the room is. Posting in the room is that accountability piece. It's you telling me I want to follow these rules. And then when you break those rules, it's you accepting the critique and understanding that the only person responsible for your success is you. That's what happens at the I don't know shit stage. But then you start to study, and then you start to participate, and then you start to use the spreadsheet, and most importantly, you start posting in the room, and you start getting that feedback, and you find this upward slope, and you'll have bad days where you break rules, and eventually you get to I did it. And guys, there's a point in here that's not on this timeline. And it's usually about right, let's change the color. Right about here, after you commit to doing everything right. Whoops. This is, I'm too damn smart for class. I don't need it anymore. I'm on Apex. I don't need feedback anymore. And this is where people break the rules and they get a little back step. And then they start coming back up, right? Because your ability to read your charts grows exponentially. So your ability to break your trades, break your rules, it's going to sneak in there. It's okay. Expect it. And then right about here, you're going to do it again. And right about here, you're going to do it again. And you're going to have these little hitches that are going to make you question everything. But you're on the path, guys, and you're on a good path, and you have every resource you need to find success. Take advantage of it. Take advantage of the coaching. Take advantage of everything. And you'll get to where you want to be. But it's entirely up to you, guys. I can't make you a great trader. I can help you become a great chart reader. Your ability to do nothing when there's nothing to do, that's what's going to make you a great trader. Guys, gosh, dog it. Look at what that momentum did. It broke 3 different areas. Odds favorable momentum. Look what that termination condition did. It pushed the market down. Oh my gosh, what is that? That's 80. Is that 80 points? No. 60 to 30. I stink at math, guys. That's 30 points. 40, 20 points. It's a lot of points. I stink at math. But I do know that the termination condition won. I do know that the momentum pushed it down, right? And I also know that my rules weren't met for an entry, so none of that money was mine. Son of a gun. None of it was mine. And I'm okay with that. Because I know that if I'm patient and I wait for my rules to be met, I'm going to find those winners, right? And I'm also going to find those losers. I'm going to find stuff I didn't want to find, but it's part of it, right? Go out, fall in love. You're going to get your heart broken every now and then. Doesn't mean that love's no good. It just means, it's time to learn something. All right, there's my soapbox for the day, guys. Thanks for listening. Keep it simple. Keep it simple. If this guy's in a white room hanging out by himself, let that be your path. Don't go try to find him here. It can be easy or it can be difficult. It's really up to you. Some of you go, there's Waldo right there. And it takes you no time at all. You and I can't be friends. Because for me, simplicity is the key, guys. Is that it? Are you guys giving up on me? All right. So here's what we're going to do then. Guys, keep sitting on your hands. I'm going to call it a day. I love it. Keep looking. Keep waiting, guys. Let that be your path. But we are 45 minutes deep without a question. So what I'm going to do is I'm going to say goodbye, right? Paul says nothing in the way. Take the mid-band. Strong trending market, nothing in the way. Sell the mid-band until it quits working. Amen, Paul. Guys, have an awesome afternoon. I hope everybody has a great one. Study a little bit, right? Look at your rules. Make sure that you're cool with them. Write down questions if you want to talk about something tomorrow, guys. Tomorrow is Friday. Monday, the markets are closed. There will be no class on Monday. I'm going to fly to Austin over the weekend. I'm going to go say hello to my children. And more importantly, I'm going to say hello to their dog because I miss her. Safia, I hope you have the happiest birthday ever. You're making a Ron C ATM? I will see you guys in the morning, and I'm going to be smiling just as big as I am right now because I know what I do every day works, because I know that I have advantages. First entry's a little low, right? And then nice recovery, Tony. Thank you, for Ron. Just a little early there, Tony. Man, especially when the advantages aren't there, give that thing something to bounce off of, right? Are you testing Ron's theory? Can I give you some help on it? And Ron will correct me if I'm wrong, because he likes to mess with me. Ready? So check this out. Odds favorable momentum, right? Market's absolutely screaming. And I'll use these bars right here. So Tony, here's your secret, okay? Do you see where the bars are in relationship to the small triggers? The bars are outside of those triggers. They're outside of that trigger. So this is your momentum phase. This is the building momentum phase. This is the strongest look. This is the best look. This is where kickassery takes a backseat to nobody. This is where your chance of success on this style trade goes up exponentially until they start working their way back to the other side. And now you've lost that advantage. You've lost that super strong momentum phase look. So when you're looking for that style, right, you've got the momentum, the path is pretty clear. Let those bars be in the momentum phase, and it's going to create the highest advantage for you. It's hard to take a momentum trade when the momentum is gone, right? Because when the momentum starts to go away, when the divergence prints, it can't be a momentum trade anymore. You got to kind of squish it back to a trend trade. Does that make sense, Tony? Does that help a little bit? Look at that momentum phase right there. Look at that momentum right there. It's like, oh, that was me singing the momentum. That is 10 points the easy, or 10 ticks the easy way. I hope that helps a little bit. Guys, I'm not going to lie to you. I can teach Ron's trade. I haven't figured out how to take it myself yet. I don't know why. My brain's not clicking. But after the fact, I could go back and I could find every one of his trades. I could probably send him a spreadsheet with everything he did for the day and be 90% right. And that's what I do in this classroom, guys. I recognize what you guys do, and then I hold you accountable to your plan. You're all unique. You're all individuals. You all have plans, but I recognize it when you deviate. I really, really do. And it's never to call you out. It's just to help you get on the side of consistency. So good stuff, guys. Is his trade the first trade on the small chart on the it's not the first trade, Sophia. It's whenever he has odds favorable momentum and a clear path. That's it. When he has odds favorable momentum and a clear path on the 13-2, where's that arrow? He's in the momentum phase. There's his entry. Whoops. There's his exit. It almost seems too simple, right? But guys, don't try to be Ron. Ron worked long and hard at developing this plan. It works for him. Be you. Or if you're gonna try it, try just it, guys. Get on simulator and don't cloud your brain with everything else. Look for one thing and do it well. I don't care what your one thing is. Find one thing and do it well before you start trying to do everything, or you're just going to drive yourself nuts and you're going to frustrate yourself because you can't for the life of you figure out why you can't catch the trades that you want to catch. All right, guys. Have an awesome day. Try it on Sim. Post your pictures. We'll talk about it. Send Ron $1. Go to Omaha Steaks and get a steak package and send it to Ron and say, hey, thanks for introducing it. Yeah, go listen to some Tina Turner. Rest in peace. I hope her heaven is beating the hell out of Ike when she gets there. Guys, have a great afternoon. I'll see you in the morning. Trade well if you trade in the afternoon, guys. If you do something, take a picture. Bring it to class tomorrow. I'd love to talk about it. I will see you guys bright and early tomorrow. Be good, everybody.